Hey guys, welcome back to another episode here on the Semiconductor Podcast. Today I want to take a closer look at two stocks not named AMD or Nvidia that can benefit from AI. On today's episode, what I want to do is take a closer look at just the overall AI market in general, these growth opportunities for these stocks, and obviously some risk, valuations, and so much more. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
So first, let's just start off with overall market thoughts. And I do believe the best place is to just take a closer look at Nvidia and AMD and kind of showcase what they believe the long-term opportunity is in this space. So Nvidia, they believe that there is semiconductor market is a $1 trillion long-term market for them. And if we take a closer look, $300 billion of that is coming from data center systems. So obviously this is going to be those AI workloads, those AI solutions, that AI hardware. Then they also have software in this space like NVIDIA AI Enterprise and Omniverse Enterprise, which can also benefit from there. So we can see this is a huge multi-hundred-billion-dollar market. Now, if we take a closer look, most recently AMD believes that the AI accelerator market, which they really didn't break down what necessarily is within this market, I do believe it includes more than just accelerators. It should also include things like networking solutions and stuff like that. And this is expected to grow from $45 billion in 2023 to roughly $400 billion plus in 2027. So like I mentioned, today I want to take a closer look at two stocks. The first stock I want to take a closer look at is Super Microcomputer, a solution of data center servers and other types of AI server solutions. They're really focusing in the AI market. If we take a closer look at Super Micro right now, we can see the stock is sitting at $313. Year to date, the stock is up over 273%. We can see the company right now has plenty of cash and short-term investments, is positive in trailing 12 months of cash flow from operations. They do have a nice amount of total, a small amount of total long-term debt. They did kind of do an offering recently, so we are going to see that increase, but we can see revenue has increased dramatically in the trailing 12 months for the past few years. Some other things, if we take a closer look at their revenue breakdown, it is important to know that most of the revenue from Supermicro actually comes from the United States. You should look at growth opportunities. First is just the robust in revenue. The company did achieve a 14% year over year, and right now we're seeing that GPU shortage market, and they were still able to grow at mid-teen levels. The other thing is significant developments in AI and cooling technology. This is a player that's focusing in, like I mentioned, the AI market. They create solutions for the H100, for the MI300, for even Intel's Gaudi solutions. So this is a company that's focused in the AI market, and it doesn't matter who wins. Is it Nvidia? Is it AMD? Is it Intel? They will be able to get some piece of the pie because they're focusing on multiple partnerships. The other thing is they are kind of improving their technology against other server providers because they are really focusing in things like cooling technologies, things like their motherboard solutions as well, and they do make a lot of custom solutions and are first to the market. If we take a closer look, they're also expanding right now. They are recently increased their expansion to roughly 5,000 racks per month, but they are continuing to increase their overall solutions here. And some other things, they do expect that revenue, while for this year is expected to be somewhere between 10 to 11 billions, in the long term their target is 20 billion, and they do expect and show confidence that they will hit this a lot faster than initially intended. So here we can see Supermicro offer racks for numerous solutions for Intel, for AMD, and for Nvidia. So now I want to take a closer look at some of the risks because those are also very, very important. So obviously the main risk is just global chain supply risk, a supply chain risk, because this company is so dependent in GPUs and we're still in a supply constraint market. So that can obviously impact the revenue. Huge market competition here in the data center, in the AI, especially in the server. So that can obviously hit margins as this company tries to be a little bit more competitive and also try to be a little bit more, again, more market share. Margin pressure, like I mentioned, for overall market. And finally, just macroeconomic factors. If we start to see some slowdown in the AI because of IT spending slowing down, just global economic conditions can also create some form of pressure of slowing down of servers. numbers. We're also going to take a closer look at valuations. Valuations, as last time I looked at in December 18th at 1026, they might have dropped a little bit, but we can see forward 1 year PE ratios closer to 15 in the mid teens. I personally believe right now Supermicro is one of those where you kind of do small dollar cost averaging, because obviously you have the opportunity to grow, but there are better times or there could be some better prime points. So valuations is not necessarily overvalued. I think it's properly valued, but I do believe there's also opportunities later on where we might get better price action. Now I want to take a closer look at company number 2, but first I just want to say thank you guys for the support. If you haven't, make sure to hit the thumbs up and the subscribe button and click join to learn more. Special offer at fool.com/Jose. And don't forget that exclusive membership program where I do weekly videos. Now, the second company I want to take a closer look at is Marvell Technology, ticker MRVL. For those that are not familiar, Marvell creates semiconductor solutions that are used on networking sides. For example, they have their Perseus, which are optimized for clouding solutions. They create numerous kind of networking chips that use all over in the data center infrastructure for cloud and AI solutions. Here we can see their most recent revenue breakdown. Most of the revenue comes from the data center market, roughly 39%, followed by carrier and infrastructure. Unfortunately, we're going to see in the risk that this market is seeing a lot of weakness in a lot of their end markets. But right now, the one that's really seeing that strength is that data center, thanks to AI. We can see the company does have a nice amount of cash and short-term investments, is positive in cash from operations. Unfortunately, they do have a nice amount of total long-term debt, but their overall revenue continues to grow. This is a company that has made a few acquisitions, and I do believe that's where we kind of see the overall growth in total long-term debt. In AI-specific opportunities, cloud computing needs a lot of infrastructure, especially for the kind of data and networking communication that we're seeing in AI computation and cloud environments. So obviously, there is that growth opportunity there. Marvell is also focusing on custom AI applications as it is driving significant growth. We are seeing a lot of in-home semiconductor solutions being built, so these solutions are really strong there. Then obviously the AI-driven and data center market, as we continue to see the requirements for high-speed networking and storage present a huge growth opportunity for Marvell. More importantly, their optical interconnect technologies for AI, which are used to kind of connect these huge superclusters of thousands and thousands in GPUs, are doing really well. Marvell has a strong partnership with Nvidia as they continue to grow the accelerating market. So obviously, optical solutions are very important for AI networking and bandwidth solutions. Now, if we want to take a closer look at risk, there are a few risks here. First is competition from Broadcom, ticker AVGO. They are kind of their true competitors. The data center growth is currently dependent on AI, which is dependent in AI hardware and GPUs, very similar to Supermicro, right? They are dependent on that GPU market to some extent. The rest is there is an uncertainty in the speed of recovery for the rest of the end markets that Marvell is in. For example, the carrier infrastructure market is expected to decline roughly 40% sequentially as the initial 5G rollout wave has kind of slowed down and softening demand. Obviously, there is a growth opportunity as extending 5G technology, but right now the initial rollout wave is already slowing down. We can see the enterprise market is expected to fall mid-single digits sequentially in the upcoming quarter. The automotive and industrial markets are expected to drop 20% sequentially, and the consumer market is anticipated to drop mid-teen percentage sequentially in the fourth quarter. So we can see a lot of, in my opinion, short-term pain. The biggest growth long-term pains are that competition from Broadcom and that dependency on AI and GPUs. Obviously, if the AI market slows down, it might be a bad news for Marvell, as this is where a lot of the growth is currently coming from. Now, if we take a closer look at valuation, Marvell's revenue estimations are expected to grow dramatically throughout the upcoming years. We can see 2 fiscal years ahead is expected to be $7.3 billion. If we look at current PE ratio, forward 1 year, PE ratio is 29.43. It's not the most expensive, but very similar to Supermicro, in my opinion. I do believe this is now time for maybe dollar cost averaging opposed to buying big bulks, as there are going to be pockets of opportunities, in my opinion, in 2024. Regardless, I do believe both Supermicro and Marvell can benefit from the AI market. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.